Today's IPO is CUCKOO International Malaysia or MEL Berhad. So yeah, some of the details. Of course, the most important one would be the balloting of the application and the closing as well. So the closing will be 5th of June. So if you want to apply for the IPO, please do it before then, or at least between the opening and the closing, which is 26th March. Pretty long opening because there was a delay. Anyways, important details include share price $1.29. So that will give a market cap of approximately 1.85 billion ringgit. 2023's PE is 21.2 times, and 2024, looking excellent, is 14.1 times. Now, if you want to hop onto the IPO, do consider clicking on our Moomoo link, and Jonathan, guide them through on how to apply.
Yeah, so if you are a new user, you can get a bunch of cash rewards over here. You can just pause the video and see the amount of money that you deposited and what are the cash rewards. And on top of that, if you put in our code, which is FIRE24 at the exclusive deposit, you just search it up and then there's a code for you to fill in over there. You can get an additional 40 ringgit of cash rewards. So if you want all of these benefits, make sure to do it with our referral link. It will be in the description and comments. And also make sure to register using Moomoo for the CUCKOO's IPO and do it before 5th of June, 5 p.m. Okay, so what does CUCKOO does, MJ?
So they predominantly got 4 business segments, right? You have CUCKOO branded, which is on the left. You have CUCKOO co-created. Both of these are the bulk of the revenue. And then you have smaller ones like Wonder Lab, Wonder Dewi, Wonder Clean. So CUCKOO branded, which is the one in red, would be your water purifiers, air purifiers, even treadmills, washer and dryers, things like that. And for CUCKOO, you have co-create, which does mattresses, air conditioners, massage chairs. So they are also quite interesting. They have an omni-channel distribution network where multiple offline and online distribution channels. So that's another good part about the business.
Yep, and also just to share a little bit on the co-created, they are basically working with other companies to help them sell the manufactured products. So CUCKOO, what does CUCKOO bring on the table is basically their sales team and also basically their leads and their sales channel and distribution point, all this kind of stuff.
Yeah, so just as a little fact for you, they have quite a big sales and service personnel group. You can see here. So you can take a pause and see all the different numbers here. Yeah. So revenue breakdown. You have here the margins as well. So as I mentioned earlier on, CUCKOO branded and CUCKOO co-created are the bulk of revenue. In fact, you can say almost 100% as of IPE 2024, with CUCKOO branded being a lot bigger, right? The margins are also slightly higher as of 2023. 2024 is not too much different as well. Quite profitable, mainly because it's their own brand, right? If you co-create it with someone else, let's say, for example, they have one partner, which is Lee Swee Kiat, which they do for mattresses and beds and all that. You should expect margins to be a little bit lower.
Yeah, and also just to highlight a little bit, the revenue contributions from their CUCKOO co-created, last time it was around 2.9%, then now it's growing to 20.6%.
So that has grown a lot. Yeah, so this is then another aspect of the business which has been doing pretty well and is riding a specific trend. But someone like CUCKOO has already taken advantage of this trend in a way much earlier on, where they offer rental services. So you can buy a product outright. That's one way, which is the one in yellow. And then you can then buy it in different installments, right? Over, let's say, 5 years, for example. I'll show you some of the math later on. So the trend, they've already rode this trend for a long time, mainly because of the economics. People's budgets are more tight and things like that. So that's why they have to go opt for rental. But outright sale, which is people buying it straight cash, is actually quite small. So this is their cost, and it tells you where they spend their money a lot. Almost 80% cost of sales, and part of this would be their sales sales team, there's a lot of people that they have to pay as a result, right? Of course, there are other things like depreciation and all that. But yeah, so it gives you an idea, right, of where the crucial cost is located. So just a brief look at the industry, and it's quite exciting. Although it will slow down in terms of the percentage, but the actual size is still going to grow by quite a bit. Today, the market has grown over the past 5 years, roughly 14.4%, which is doubling every 5 years. But the next 5 years, estimated will double in 7 years. So it will take a little bit longer to double, but again, it's a very big amount, right? So like you see from 2019 to 2023, the increase is, my math is right, it's 2.7 billion, right? Yet from 2023 to 2029, the increase will be 4.1 billion. So that's a pretty big jump. So that's something to look forward to. So looking at their peers, they are also quite a bit ahead in many areas. For example, they have more outlets. But even though more outlets, they have fewer sales personnel. So in that sense, you can say they are more
Efficient.
efficient.
Yep.
So that's something to know. But I would say they're still, it's not like they are the number one by a big margin, but they're definitely very respectable, and despite the strong competition, right? I mean, you've probably heard of CUCKOO brands, and maybe you are using it also. So these are also respectable, you can say, opponents, but CUCKOO has stand up really well.
Okay, so now we look at the teams. Number one, we have over here, which is Mr. Koo Boon Hak. He's the chairman, 56 years old. He's the guy that actually worked very early, since the 1995. He works in CUCKOO Holdings. And then he also got promoted very fast. At age of 30, he did straight away become a director. That's very impressive already. And then the CEO 7 years later. And then another one, which is the CEO, Mr. Ho Kian Chun. He's 50 years old. He joined Koei, which is the competitor of CUCKOO, in 2007. But then after that, he left. But yeah, then 2014, he founded CUCKOO International Malaysia Berhad, which is the current company. Then the next guy we have over here, which is CFO, Yong Kian Peng. He worked in multiple companies before, KPMG, Malaysia Airlines, EY, Huawei. I haven't really even list out other companies.
Yeah.
So that's why I put that ETC.
So he's quite accomplished in that sense. He's been all around.
Yeah,
right?
yeah, exactly. And then the last two, these two are husband and wife. Mr. Toh Seng Lee and also Miss Goh Hui Teng. So the husband is a COO. He also worked in Koei in 2008. But what's interesting about his role is that he actually joined or he worked before in the sales strategy team regionally. So he worked before in CUCKOO Singapore, Brunei, and also Indonesia from 2017 to 2019. So that's very impressive. Then after that, you have his wife over here, Miss Goh, also worked in Koei in 2007, then joined CUCKOO International Malaysia Berhad. Probably, I think the COO and CMO, I'm not sure. I'm just doing some educated guess. Probably they join the CEO. It could be that case.
Yeah, I think it's important to know for these two individuals, because I mean, I can only speculate, but looking at their age profile, they seem like the next in line to lead the company. Of course, the CEO and the CFO right now are still young at 50. But certainly you can say they are set up for at least the next 2 decades, maybe 3, because of this succession planning. That's what I can speculate.
Yeah. So if you want to know how they look like, this is how they look like.
Okay. Yeah, so what they are doing an offer for sale, right?
Yep. Not a lot, actually. The main one will be the CKH, which is the main parent company for CUCKOO in Korea. So they're selling about around 60 million shares. This is the same for the chairman, which is Koo Boon Hak, and also the CEO, Ho Kian Chun. They're also selling a little bit shares post IPO. Okay, so this one, just to show how much are they paying themselves. For 2024, in total, they're roughly going to pay about 1.8 million. If you compare that figure against the profit before tax for 2024, it's actually quite small. It's like just 1% only. So, but it's best for you to compare this number against Koei. If let's say they do disclose how much are they paying for their directors, right? If it's like on par, then maybe it's just that's the industry practice. But if it's, let's say, CUCKOO is lower, right, then which means it tells you that, maybe this management don't really work with monetary rewards.
So this is a good sign for the company regardless, because we know industry average, right? Not industry average. I mean, in general, when we look at other companies, it's way more than 1%,
Yep.
right? It's at least 4 or 5%. So to us, this is a good thing because we know that, as you said, they are not primarily driven monetarily. Maybe this is a passion where they really want to grow the business. That said, of course, look out for what their new salary might be when they go for listing. And if it's still pretty much the same and the increase is not super big, then I think we have at least one sign that the management here are very serious about their job. Yeah. So looking at the numbers, so the margins are pretty much this. Net debt, they are in the net cash position, in fact. So this is another sign that they are doing well, because if they are not, then they wouldn't be in this position, right? So that's something that is also a positive. That means you know that the risk of things like bankruptcy or anything is virtually zero, right? Cash flows are also pretty solid, right? With the exception of 2024, because again, they've spent a lot of money to a lot of capex, right? So that will affect the free cash flow. But if you take the normalized for the 2021 to 2023, it's pretty healthy. Okay, so we'll go into a little bit on the future first, what they're going to do. So the first thing is that they're going to expand their products and services for their brands and just business segments in general from 106 to 118. They're also going to build new 10 cash and carry outlets in Malaysia, and then 5 third-party retail outlets in Singapore. This is a healthy improvement. Sales team also, they are going to improve training hubs by almost double, right? Increase rather, and service centers by almost about 30%. One thing very interesting is that their logistics capabilities, they're also going to really ramp that up. This September of 2024, it was 31%, but they're going to grow it to 83% for massage chairs and mattresses specifically. And another thing is that in 2022, so this is not so much the future, is already at the present, but in 2022, they actually changed their direct selling model from a more commission structure to something a lot more flexible and freer now. So earlier on, I mentioned about omni-channel. So this is the thing that they've already implemented this change, which is going to improve their costs over time, because now you have more options to distribute your product, not just one anymore. Now, what's good about the company? Number one, they are in an industry with a lot of tailwinds, meaning there's a lot of wind behind their back. And so, of course, they are capable management, but on the off chance that they make mistakes and all that, because they're in a good industry, a lot of whatever setbacks that they might face would be pretty much, not to say ignored, but it will be smoothened out, right? So that's the benefit of being in a decently growing industry like this for these consumers. One thing to take note of is that the company still wants to maintain flexibility and balance when it comes to this, because you don't want to be too skewed as well into purely rental. You also want things like service maintenance and outright purchase it doesn't have to be 50-50, but at the current stage, this is what they want to maintain. So that's always a good sign. Now, a little bit of math on the difference between outright purchase and rental. So if you rent the thing, if you buy the thing outright, it's 4,500. Let's say this is for their flagship water cooler product. But if you rent it, it will actually be almost 50% higher at 6,7800. So that's why rental is more attractive to CUCKOO. Now, there is obviously the risk of defaults and people not paying, but just to let you know, 97% of their rental clients actually pay, pretty much.
Yeah, and also one thing to notice is that they have a 1-year free service and warranty if you pay it outright, but it's more if you actually rent it. You get a 5-year service free warranty.
Yeah, so there's a lot of financial incentive. There's also a lot of, you can say, non-financial incentive. And so just to build a bit more on this, people now, like I said, the reason this trend is growing is because a lot of people want a water cooler, right? They don't want to, wait so long to boil their water, things like that, or water purifier or whatever. So they want it, they see the value in it, but 4,500, especially for a lot of people in the middle class or or below can be quite a struggle for them to afford. And so that's why they have these small chunks in payments. And of course, it's a win-win because CUCKOO, they don't mind taking on the risk of you not paying because they know they're going to pay 50% more. So moving on, two more other good things which I somewhat mentioned already. Brand and product range, they're actually going to have, they're going to expand this 106 SKUs or packages. And then, as I mentioned earlier on, omni channel. So this is one big thing that they stress on a little bit because being too reliant on direct selling is not optimal. Okay, so there will also be lesser capex as they grow their co-create segment because they are working with someone else, right? It's just the way they work is, look, some other places say Lisuket, they build the mattresses, but with CUCKOO, they are able to use their sales distribution network to basically cross-sell a lot of these products. And that is why, and they don't spend money, right? Or not as much, right? Than, let's say, branded to develop their own product. But the margins, as we saw, is like not too far apart. So that's a very exciting part of the company. Another one, which I think is very unique as well, is their cross-selling. So almost half their sales come from their service group. So the people who are doing the maintenance and all that actually contribute almost half of the sales. So this would be like, let's say internet service provider, Telecom Malaysia, TM. The person coming to fix your modem suddenly say, hey, Mr. So-and-so, why not you upgrade your modem to this? Why don't you buy this portable Wi-Fi or whatever, any other adjacent products that TM might be selling? These service guys are actually doing a bulk of the sales. So that, 2023, that number was 26%. As of late 2024, that number jumped up to 46%. So this is a very smart and I would imagine very affordable way to increase sales. Okay. So the risk, number one, would be the brand. So, in the past, you have very established brands like Panasonic, right? 30, 40 years ago, they were the brand. But today, we have so many options, and Panasonic is not necessarily something that you need to have. So CUCKOO, although now their branding is pretty top, but you never know in the future, right? So this is always something to pay attention to. So if you invest in the company, you need to always hear out, go when you visit your friend's house, when you go into other people's house or whatever, or you see whether you can see the brand of the water cooler and how often do they appear, how do they talk about CUCKOO and things like that.
Yep. Then number two would be the ability to maintain and expand their sales channel network, or for layman's term is whether you want to see their sales team is turning over a lot. So this is very key for any type of sales organization, right? You need to keep your team motivated, especially your sales team, and also your service guy motivated. The fact that they can actually travel so far and also do the more like upselling or maybe even sell more, right? I mean, that goes to show you that probably CUCKOO is actually paying them quite a fair sum of money, or they are sharing some of the commission with them. That's why it motivates them to sell more. But you also need to know the indirect impact is that what is the opportunity cost, right? We're working with CUCKOO versus working with, for example, let's say Corway, or maybe even working with other sales stuff. So like, for instance, like real estate agent.
Other industries.
Yeah, other industries. So there's such opportunity cost. But if let's say CUCKOO managed to pay them well, or maybe even create a culture that is like very family, very well taken care of, then probably more people will be inclined to work with CUCKOO for the long term. So yeah.
So the next thing would be the ROIC lowering. So 20% average leading up to 2024, I believe, is, it was solid, right? It's amazing actually, 20%. For those who know, we are ROIC focused investors. So whenever we see a number like that, we are always very interested. However, because of the recent capex, the average might lower down. Our estimate is maybe 16%, at least in the next year. But if they continue to spend more money, you would expect this to lower and it becomes less attractive. The next one, which is probably the most the biggest question mark, will be China's competition. We know through our information of other industries, China is coming in big because of subsidies and ability to mass produce a lot of things, let's say cars or gloves or whatever. China competition is very real because they can charge prices at pretty much ridiculously low, right? But they are not big in Malaysia as of now. Higher Media, Xiaomi, all these also do products that are similar to CUCKOO, yet we do not see them in the space yet. Now you might say because we don't see them, therefore they're not a threat. I would say that because you don't see them, you need to pay attention because they might decide, right? Mishware wasn't here 5 years ago. Everyone thought it was Tea Life and all the different bubble tea stores, but now Mishware is coming in.
Yeah.
Right now, they have more outlets than McDonald's, if I'm not mistaken. So that is something to take note of, and of course, linked to ROIC, capex intensity is also increasing. 3.6 million, 2021, and then in 2020, I believe 2022, then 2024 is 43.4 million. So yeah. So our overall thoughts are, I think the transition into omni-channel model, it has done really well. Less to do with direct selling, and they have a more diversified, right, structure. Number two, I think if I were in their position, I would be making the exact moves that they're making. The fantastic growth potential, 23 market shares of 2024, and I don't think they can do any much better. Number three, of course, just because you're good doesn't mean that you don't have a risk of failure, making mistakes for the expansion. Sometimes you overextend, sometimes you're a bit too slow. This is always going to be the risk. Rental payment failure, this is a small risk, but it's there nevertheless. People actually purchase these products through, let's say, through rental, and then but the commission to the sales people are paid upfront, but the payments are dragged out over, let's say, 5 years. Although 97% are collected. And of course, China will always be that big question mark risk that you need to pay attention to.
Okay, so if you guys are interested with CUCKOO, make sure to sign up using our Moo's referral link at the description and comments below. And do it before the 5th of June. And also don't forget to collect all of the rewards. Here is the step-by-step on how to do it. A very simple thing only. This is actually the old model of or the instruction of how you can do it. Right now, they are very efficient. You just need to go to the markets and then go to Malaysia. Just scroll down until you see IPO. Then you already straight away find CKH or CUCKOO's ticker will be over there. And then you can subscribe, whatever amount you want to subscribe, you can just do it so accordingly. So that's about it. I hope you guys learned a lot about CUCKOO's IPO. And here is our March 2025's performance. We only down a little bit, like 2% as compared to the February 2025's performance for Pro Malaysia. Whereas for Pro Global, it's about 4.75%, also down slightly. But the boring portfolio actually went up, which is quite surprisingly. Also because we collected some of the dividends during that particular month. So that's why it grew quite a little bit. And you can also notice that the number of stocks for each of these stock portfolios has kind of like shrinking, especially for the Malaysia portfolio. That's because we are changing a little bit our strategy. Probably we're going to be position size even larger for certain companies. So if you guys want to know what stocks we are keen to add more, you guys can check out inside Fire Pro. And also, just to add one more, the boring portfolio right now, our average dividend yield is 6.53%, which is higher than EPF's dividend rate of 6.3%. So if you're curious about what's the name behind it, it's also inside Fire Pro. And you can get the 10% coupon in the description and comments. And if you want to get a taste of it, you want to see how we do our write-ups, we also post one of the video inside SIB, as well as the management notes, the exclusive notes that we share to our members. We also will be sharing you guys 3 sample management notes inside this free sample. The links will be in the description and comments below. So that's about it for today's video. See you guys next time.
Bye-bye.